Hello traders out there in Traderland, D7 here with Grok Trade, and Florida got hit with a hurricane and I had to evacuate. And I'm here in my Indianapolis home, north side of Indianapolis, the Carmel region, where I have a rental here. Fortunately for us, it was not, it was vacant at the time, so we were able to come back to this place. But let's get into technical analysis. I'm going to talk about the hurricane at the end of this video and some things about China and what's happening with the US dollar, some things that are that are of importance to us, okay, including Russia. It'd be some good things to talk about. But anyway, the first thing I want to talk about is how deep red in the markets we have gotten. I mean, we had a bloodbath this last month. This quarter's been horrible. We're almost going to have we're anticipating a third consecutive GDP downward movement. It's just bad. No one's now arguing the fact that we're in a recession. People were arguing that forever. No one's arguing that now. Everybody on all political sides are saying we are in a recession. You and I, because you've been following me, if you have, for the last 6-8 months, we've been saying at the top it was recessionary. When energy spiked up, technicals came crashing down. That is what we saw in 2007, going into 2008, when I said the markets are going to turn over. That's a recessionary turnover. That's a cyclical move in the sectors. And we saw that again. Energy got really high, techs got really low, financials got really low. And there the market turned. I said chances are the highs that we got there going into January 2022 were probably our highs, and sure enough, we nailed the top. Now, let's talk about the spiders. This is the spiders going back on the monthly chart. Guys, we're down 9.62%. I'm looking at a monthly chart. September's over. That's why we're spending time on this. Down 9.6%. Diamonds down 9%. NASDAQ, Q's down almost 11%, 10.7%. The Russell's 2000 down over 10%. The financials down 8.1%. Guys, that is a bloodbath. A single month dropping 10 to 11% is a significant drop in the markets. Keep in mind that 87% of all professional investment advisors cannot beat the markets. So chances are the vast majority, 9 out of 10 individuals, are going to be a little worse than being down 9 to 11%. They're going to be down 12 or 13%. That is the norm in the industry, okay? Keep that in mind. Now, I want to go over to the weekly charts, okay? First, before I do that, I wanted to stay on the monthly charts here, but I'm going to go to a line chart and share a couple things with you, okay? So let's go back to the spiders. The spiders, all I'm looking at is this big rally that we received, and then the pullback, and I want to know where we're at in relationship to moving averages, but the 50% Fibonacci. So this is the 50% Fibonacci retracement, is a great area to find a bounce. At the same point, we have a 50-month moving average coming up that could act as support, just like it did there. This is this red one that could act as support. It broke through the yellow one there. It found support at the red one. We broke support here at the yellow one. It find support at the red one? It could, and it's at the exact same area, the 50% Fibonacci, and this swing high. Do you guys see that? That swing high coming across is also in that area. So in other words, I can see it pulling back a little bit, but I see a bounce opportunity coming. I've been saying that for 2 weeks, that we should be seeing a bounce anytime soon because we have all these bullish divergences. But the markets keeps crashing lower. In a bear market, things can go down very, very fast, but keep in mind the rubber bands are rubber bands are rubber bands. The more they stretch, the more they stretch. They'll snap back fast. You got to be ready for that when it snaps. So anyway, but don't get too early to the party because this thing can continue on downward. It can just keep stretching to the downside. Then we can easily get down to 61.8 here, down, and then finally bounce. But if we drop down into the 76 area, then we will not see a new high for an extended amount of time, statistically speaking. So it is so important that we bounce at the 50, bounce at the 61, but we should not be bouncing at the 76 or lower. If we do that, chances of a long multi-year drop, meaning no major new highs, is almost imminent. Almost imminent. If I go here to the diamond, same thing. We're up, 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 up. We pull back to, and there's the 50% Fibonacci. It did go below the 50 MA, 50-month MA, and we do have two swing highs here. Look at that, two major swing highs on the monthly coming across. A lot of support. We're right there at it now. We need to bounce, and soon. The Qs, monthly chart. Went up, 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 up. It pulls back. It broke below the 50. Broke below the 50. Actually, how did I drew it on this one. I wonder if I should be drawing it on that one, actually. Hold on, that is very interesting. Very, very interesting. I'm going to go here. I did it from that. I just want to get a bead here and see if I were to drop this thing right there, where that puts us. It's still below the 50. You can see that right there. So let's go back to the line chart so you can see this with me. I went to this swing instead of this one. On this leg up, a pullback, still below the 50, but above the 61. And we have this major swing low there, and we're just a tick below it, but right above the 50-month moving average acting as support. So we have two areas of support there. We could get a bounce, but we got a lot of trend line resistance ahead of us that we have to be able to break through on the Qs, on the techs. On the techs have to get bullish and quickly on the monthly chart for this thing to have any legs going into the near future. If you look at the Russell's 2000, this is the IWM. We go way down here, up, 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 a pullback. We're at 50. We bounced off at 50, and we come back down below the 50. We're at this area of support. You see this? Big swing high. We come across. We're at that area, but we're well below the 50 MA on the Russell's 2000. We have this, but we're tick. If you look at this closely, we're ticking below that area of support. That area of support is maybe not support now because it broke it. This thing has to immediately bounce, or it will solidify the point, and we're going to probably be at the 61.8 or lower very, very soon. XLF, biggest banks on the NASDAQ ETF. It's the biggest ETF full of banks on the on the NASDAQ, and I want to look at the major swing low, up, 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 big pull back. We're above the 50%. We're at the rising 50-month moving average, and then, but we are below this swing high. We're a tick below that. This is bounce time. If it's going to bounce, it needs to bounce now. Now is the time. This is a monthly chart. I'm looking at monthly charts at this moment. Quick look at gold on the monthly chart is down at the 50%, and the rising 50-day moving average. This is an area that you can find a lot of buyers. Silver is down below the 61.8. That is very bad. It's telling me statistically that unless it rallies fast and furious and hard right now, that our chances of getting back to these highs are not likely. I could be wrong there, but statistically, the further it pulls back, the less likely it is we're going to get to those highs. Keep that in remembrance. U.S. dollars at a 20-year high. The Feds have forced the U.S. dollar up to 20-year highs, and that's what we are seeing right now on the U.S. dollar, up, 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 up. There's some things we need to talk about. VIX monthly chart was in the big symmetrical triangle. It broke out this month, guys. We go to a bar chart. You can see we broke out of this symmetrical triangle, meaning that if the technicals are good on the VIX, on volatility index, fear should continue to go higher. That means the market should continue to go lower. That's what this means. Should go lower. But we're at that point on the monthly charts that if woe to us and woe to the markets if we do not get a bounce right there. We need to get a bounce this next month. October has to do that. But if you go back in history, do your own research. Go back on the last times that we had major market drops and look what usually happened on October, okay? And tell me in the comments what you find. I want you to comment what you find on that. So Bitcoin, if you look here at the monthly, it looks like it's starting to bottom out. Big falling wedge. We're starting to get a turnover on the MACD. It's looking good, okay, on the monthly chart. Now, I'm going to go over here to the weekly chart. Take a look at the weekly. We're looking at line charts here, okay? It just keeps the, if I was looking at candlestick reversal patterns, I would have the candlesticks up. I don't need those right now because we don't have those. If I go to a chart, you'll just see they're just red bars going down, no reversal patterns. Because of that, I don't need those. I'm more interested in the line chart because I can draw my lines and it looks much cleaner. We're below the weekly moving averages, except for this big dog. This is the 200 big red, 200 MA. So this is the 200 weekly MA coming up, and we're finding support right there at it. We had a symmetrical triangle. We broke down. That is very bearish, guys. Will we bounce up? If we do, I think it'll be short-lived. It'll bounce up, 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 maybe for the month, and we'll have that bullish month that we're looking for right before it drops back down. Let's see if that happens. Diamonds, if you look at the diamonds, big symmetrical triangle. We hit resistance, we come down and broke support. We are now way down, and on the diamonds, way down below the 200-day big red moving average. The Qs, big symmetrical triangle, and bam, down below that, and the 200-day moving average. Bad news, that is no good. And if you look here at the Russell's 2000 IWM ETF, big symmetrical triangle, big break to the downside, and we're hooking there. It looks like it could be trying to bounce soon. XLF, the banks, what is it doing? Big symmetrical triangle, big breakdown, went below the 200-day moving average. It looks the same as everybody else. The weekly chart on gold is we are down, 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 big bullish divergence. We are big time looking for an opportunity. This is turning into a falling wedge. We are looking for buy opportunities on gold. Silver, if you look at silver, same thing, big falling wedge. I know there's a lot of lines here, just bear with me. Big bullish divergence. We're up, we're at resistance right now. It could break through. So the weeklies on gold and silver look really good. US dollar is just up, up, and away. And if the US dollar starts breaking down below these moving averages and this trend line right here, if it breaks down below that, look for stocks to rally and commodities to rally hard. You'll get a big pop in the market. VIX weekly chart is still confined in a big symmetrical triangle at a resistance area, has a better chance of going down than going up. Let's see what happens on that. Quick look at the dailies. If I go to the daily S&P, starting there first, the thing that I want to challenge you guys on is this. Look at the trajectory and drop of these two moving averages. Look how steep of a decline this. This is a massive pinching falling wedge that looks like it's starting to get us these bullish divergences. You will get, whenever this thing, if this thing were to bounce and break this area, it could get bullish and fast, the S&P. So this thing could just really snap. Go back in history and see last time you've seen such a dramatic drop. So take this line, like if I were to take this line and copy it or clone it, I'll just clone it. Take this line, not move it, and just say, do I have drops this drastic? You know, you go here, that was close to one, but it's not as drastic. They're not dropping this drastically. And you can go back in time. I'm using TradingView. And so what I'm looking for, you know, there was a little, oh man, hold on. I hate when I move something I didn't mean to. You have this little back arrow. That's helpful. But look at this drop. That was a significant little drop, but it was just short-lived. You'll get these short-lived ones, but you won't get, it's hard to see big drops at that trajectory going down and for them to stay. Last time we probably saw that was the COVID drop. Go and look at the trajectory going down and the huge V shape that we got right after that. Keep that in mind. So I think that this is setting up for a big bullish run after such a bearish few weeks here. I mean, out of the last 7 weeks, so there's only been one up week in the last 7. It's been very bearish. Here are the diamonds. Same thing. Very deep trajectory to the downside. It's at an angle. Tell me what degrees you guys think that is in the comments. A lot of you are engineers watching this. What degrees is that coming down on the S&P or on the diamonds? Say diamonds daily. I think that degrees is X, whatever that is. Qs daily. If you look at the Qs daily, you look at that, just a significant drop to the downside. And that big drop is just, but we broke that trend line. Look at this. The NASDAQ broke the trend line to the downside. So it almost makes this falling wedge null and void unless it were to rally and fix itself, giving us a jab, healing itself. It could do that. And I'm getting texts, I'm getting slacks, my phone's blowing up. So if I go here, IWM, if I go here, big, look at the trajectory of the Russell's 2000. But it looks really bullish, like it's going to pop up, giving us a double bottom here. Do you guys see that? That double bottom, that W for winner, or W for wow, W for wonderful. So that could happen right here. Let's see. This is the daily chart on the Russell's 2000. Daily chart on the financial ETF. Same thing. And if this thing were to bounce, that would give us a double bottom, W, and a gold daily. It's just in a downtrend. It needs to break above this to get bullish. It has to do that. Silver is in a big symmetrical triangle, coiling, building a ton of power. That power, we're going to get a big break to the upside or to the downside. Right now, it has more resistance with all these moving averages up above acting as resistance with these two trend lines versus going down with no moving averages and one trend line. Well, two. You'd have two down here. But this thing could do anything. Watch for a big move on commodities. I think if the U.S. dollar starts crashing down, and if that happens, look for this to break straight up. U.S. dollar daily chart. U.S. dollar is just up at a major area of support. It should bounce there. It should bounce right here. If it breaks this, that will be the start of the U.S. dollar dropping. And be watching this. Be watching this on the not only the daily but the weekly, and be watching the monthly, but definitely the weekly on this. And if you start breaking those areas, look for the markets to rally up and significant. The VIX daily chart is up it's kind of pinching. We have this big symmetrical triangle. But I drew this trend line because if it gets below that, that's going to be pretty bullish if fear drops below this line. VIX is the fear. VIX is fear. So if fear drops lower, that would be bullish for the markets. And however, if it breaks up above this resistance area, fear will spike higher. Look for a big move to the downside in the markets. And Bitcoin on the daily chart is coiling with between two trend lines. All the moving averages are coming together. This is that's big news, right? Watch for this thing to have a big move one direction or the other, breaking over these trend lines one direction or the other. This thing is making a move. It's so beat up to the downside. I think it has a much better chance of going to the upside than to the down, but it's anybody's guess until it does it. You don't trade what you think. You trade what you see, okay? You don't trade what you think, you trade what you see. So you got to make sure you see the charts correctly and you learn them correctly. So, all right, so I gave you all of that. Quick look at Apple, because it's the biggest one out there. If you look at Apple daily, big pullback. It tried to find support at the 50, got to 61.8. Now it's at 76. So we're not going to see a new high anytime soon. Look for this thing just to chop around sideways for a very long time. Then there it is. Okay, there it is. So let's get into some interesting things. So I posted something on LinkedIn. Follow me on LinkedIn if you don't. It's my personal account. And you can follow me on Instagram, my personal account. But Yahoo News posted this. This is Yahoo News. And this is Reuters report that China told state-owned banks to get ready to sell the U.S. dollar and buy the yuan in effort to prop up the local currency, their local currency. The move could stem the yuan's fall as it remains on track for its largest annual loss against the U.S. dollar since '94. Which is good. We are in deep competition with China, and we need to win back this economic war that they have been winning for the last couple decades. A hawkish Fed, the U.S. Fed, has pushed the dollar, as we mentioned, to a 20-year highs just this year alone, which is pressuring currencies around the world. And then you have Putin there in Russia saying the nuclear, my nuclear option is on the table, and it's there, and that's a sobering warning. And the U.S. State Department told all the Americans to get out of Russia immediately. Get out. So they've been evacuating all the Americans. I don't know. Did you guys see that news? It's the last few days. It's been happening. The hurricane has, Ian has, taken most of the news media. But I remember, this is probably 15 years ago, that the China president said, dictator, he thumbed his nose at the U.S. dollar and said it's yesterday's Federal Reserve, it's World Reserve rather. It's yesterday's World Reserve, because they want the one to be that, and they are fighting hard for the one to be the new World Reserve. God help us if we were to lose that status here in the United States. But we're now over $30 trillion in debt. Deficit is just screaming out of control too. So what is the deficit? It's what your ongoing bills that you have to pay. How much are your bills versus how much you got coming in. Debt is how much that you just owe. And both of them are out of control. But the $30 trillion debt is in bad. It puts us not in great standing in the world stage. So we have very big issues with China, big issues with Russia, two major powerhouses in the world, and we're in odds with them. We need leadership in our administration to be bold and strong. This is not a time to be limp-wristed going into this sort of market environment, this arena, if you will. It is cutthroat, and we need somebody that's savvy and a bulldog that gets things done. Oh, don't get me started. That I love this great nation that we live in, and I don't want to see anything bad happen to it. But you got to run this nation like a business. You've got to run it like a business. And if you don't run it like a business, and if you run it like anything else, you will bury the economy. It's just a matter of time. So anyway, that's not what I want to talk about. Let's talk about Hurricane Ian. I live in Tampa North Side. Zones A and B had mandatory evacuations. We're only 15 miles from Zone A. They had immediate evacuations, mandatory evacuations pretty quickly. And we were fairly close to that zone. And then all of a sudden he said, guys, as Ian was getting closer to us, we need you to evacuate also. And it was mandatory. So we moved. I moved the family. We packed up the car and the dog and the kids and everybody and headed back to Indiana. And it's where I used to live. And fortunately for me, my house that we had rented is vacant at the moment. It's fully furnished, so it made it very easy and comfortable for us to come back here. But I want to share something with you that this is the first time I had to deal with a hurricane warning of this magnitude. It came in at a Category 4 hitting the West Coast. To put that in perspective, the size of Ian was so big that it was tied for 5th place on the largest hurricane, strongest hurricane to ever hit U.S. soil, ever. And it was darn near a Category 5 when it hit land. Katrina wasn't a Category 5 when it hit land. It was a Category 5, but it hit land at a 4 or a 3, whatever it was. But the levees broke in Louisiana, and that's why you had such devastation. Here, it came hitting our coast at a Cat 4, 2 miles per hour under a Cat 5 classification. That Cat 5, the Cat 4 got up to 155 miles per hour sustained winds. I was driving 80 miles per hour with my family, and I said, roll down the windows. I said, girls, I have 2 teenage girls. I said, put your hands out the window. Feel the power of that wind. Going at 80, okay? And it was 70 mile per hour zone, guys. 80, I was just, keeping up with traffic. And I said, pretty strong, isn't it? I said, what if you had a house plant and you put that out the window? what would happen? They said, oh, it'd tear it apart. I said, the winds that are coming towards Florida right now are twice this speed. What do you think that would do to a house? What do you think that would do to the plantations, or people, and the harm's way that people will be in with that sort of power? And that little life lesson of them putting their hand out the window was an eye-opener for them. Their jaws hit the ground, their eyes popped, because they didn't have any way of understanding 155 miles per hour winds. It's beyond their grasp, because it's relative, right? I had to make it relative by having their hand out the window, and it was so strong, trying to keep your hand from moving or, even in one place. They had a reality check. So it comes in, not in the last hour, but in the final minutes, man. It did a pivot due east, slamming into Fort Myers and Sanibel Island. God be with all you guys. I mean, the horrific damage that you guys have taken. It's just horrendous. But the only silver lining is it didn't hit the city of Tampa, which casualties would have been exponentially more because of population. It would have been just a nightmare scenario. A major city getting hit with something close to a Cat 5 direct hit, that close to the Gulf. So they sustained a lot of death. You've all been watching the videos of those. It's so sobering. But Valerie and I were in evacuation zones, and Valerie is one of the gals who works for me, not on Grok Trade, but on one of my professional businesses that I own in the financial world. And she was going to evacuate and did not, because there was an elderly couple that didn't have any loved ones around, and one of them had a serious disease, and they needed help, and she knew about this family. Her place is on the second level. She took in that family, elderly couple, brought them up, and hunkered down, had everything charged, and had plenty of food, and they were ready for major floods. I mean, they're on second story, so they were fine, but they could have been stuck there for a couple weeks, right, if things got really bad in the area. But, I just commend her having, taking on that risk to come out and to help people in great need. And anyway, I just want to do a shout out to you, Valerie. Kudos to you. That's awesome. Then it moved up, and Ian moved up right to Orlando. And one of our other teammates on the professional side, he's a fund manager, and it was going towards his place. And fortunately, the damage was minuscule. He boarded up his windows and all, and it sustained very little damage. And so we're very thankful. We're blessed that nobody on our team and none of our people got hurt. Everybody stayed safe. And that's what it's all about. So that's it, guys. I'm interested to hear any comments that you have about Ian, the storm, any comments you have about Russia or China. I like not only hearing from you, but I like the others who are reading the comments, hearing from others. You also. Let us hear your thoughts on something. Feel free to get into friendly and fair debate, because iron sharpens iron. But I don't like nastiness. Keep that out. We don't. There's no room for that. No need for nastiness. But I just like the idea of having thoughts and us having that collective thinking on what's happening out there in the marketplace and what we think may happen with Russia, what we think may happen with China, what type of economic war that we're in, or if you even think that we are in one, what you think about the debt or deficit. Just really interested in your thoughts and what you think might happen to the market. And it'd be interesting, a month, 2 months, 3 months from now, it'd be interesting to go back to these comments to see how right you might have been, or how right somebody else might have been. So anyway, that's what my hope is for you. If you found this video and you're like, well, I'm kind of intrigued by all this. This is crazy. I didn't expect to hear technical analysis like this. And then, somebody just drone on and on with a monologue at the end. Feel free to subscribe. We have, I think, right around almost 12,000 subscribers. And I'm very thankful for each and every one of you. I don't know what we have done to deserve that, but we're very thankful, very thankful. So anyway, that is it. I hope this video has been beneficial to you, and give me a like if it's something that if it did benefit you. So there it is, a 30-minute video. I cannot believe I just did that to you guys. I'm so sorry. And if you made it, say you made it, because you're the crazy one. Only you and I will know what that means. If you said made it, that means you made it to right now, and that makes you officially psycho. Catch you later. Bye.